The audience, it's great to have you all back for our second hour episode of our talk on Spotify. Today we are doing a deep dive on the company, and I'm very happy to welcome Jeremy Deal and Sleepwell Capital. It's great to have you on, guys.
Great to be here.
Thank you, Tillman. Thanks for having us back on again.
It's great you're back. So maybe let us start with the question, what kind of animal is Spotify in your eyes? And try to define what Spotify as a business is. Is it a streaming service? Is it a platform? Is it something else? What is your definition of Spotify?
Sure. So maybe I'll start. It's not the easiest question, especially because most of us that have been following it for the past couple of years know it's been evolving at a rather rapid pace in terms of its strategy. But I guess the most recent definition in my head, the way I think about it, is the only focused and scaled audio platform in the world. That's kind of the one-liner for me. It's not only a music service as it was if you look back as short as 4 years ago, but it's really going after the entire audio market nowadays. So its strategy has changed a lot, and I expected it might look something different if we think 5 years from now.
Yeah, and I would echo that. I would say that it's where it started. How people know the company maybe 4 or 5 years ago is kind of behind. I mean, it's evolved. It like all great companies, it started one place and leveraged itself into a very different place. So as an audio platform, that transition from just a music streaming business to truly an audio platform is a really important differentiator, because it becomes a really important tool for the creator, and also just kind of a must-have for consumers around the world, because it's an enabler for the creator and the fan to interact in a way that wasn't really possible before.
So to try to summarize your answer, you miss a lot if you define Spotify just as a play on music, or?
Yeah, absolutely. I would say that. To be clear, if you look sort of the total listening hours, the vast majority of that share is still in music. But as we've seen from the recent investments and shift in narrative and focus, it's much wider than that. Not only podcasting, but we've also seen them go into live audio, also known as interactive audio. So I think we'll see them attacking new frontiers when it comes to the audio market globally.
Yeah, not that there's anything wrong with the music side. I mean, I don't think it's. I think the music could potentially will continue to be, a really important part of their business. But on the music side, it's easy to say, "Oh, look at this other business they're getting into," and just look at it as an audio business. But the music side has an enormous opportunity. So it's not necessarily that the music is sort of at maturity. It's just that music in the prior way that was used, the prior way we think about monetization of music, is what's changing quickly. So yes, Spotify is more than just music, but just looking at the music side, there's an enormous opportunity. So I think that's important as well.
You already mentioned it, Sleep, that Spotify is unique. How unique are they, and how are you both thinking about the competitive landscape of Spotify? Who are they competing with?
I think the biggest competitor is radio. I mean, Daniel Ek talks about that, and I see that. When I travel around and get in Ubers in different countries. I mean, I was just in New York for 24 hours, and I took a series of Ubers, and every Uber I was in was listening to the radio. I mean, it's radio you could think of as having almost 100% market share everywhere in the world. There was a study done recently where they looked at the radio listening hours in 21 countries was something like 2.4 hours a day. So in places like the US, it could be higher. So I mean, radio is by far the biggest competitor to Spotify and to streaming in general.
Yeah, I think that's actually a very interesting way to think about it, Jeremy, and perhaps not the most intuitive one, but absolutely, I agree with you when it comes to the the big prize or the opportunity when it comes to the total share of audio. Radio is still on a global basis the biggest, what's capturing a lot of that share. So in that sense, it makes sense for them to go after that and do as much as they can to bring all of those or as most of those listeners as they can online. When it comes to, on the other hand, when it comes to sort of pure music streaming companies, naturally there's competitors that offer similar products to Spotify. The biggest ones being the big tech companies that we're all very familiar with. Obviously, Apple with Apple Music is the second player. Just to be clear, Spotify does lead with roughly a third of the market share when we look at music subscription streaming specifically. So you have Apple after that, and then closely followed by Amazon, and then Google with YouTube Music, and then you have a bunch of much smaller players. Most of them scattered across different regions, and if you look at India, for example, there's a lot of players that are very strong locally, but then have no presence in other countries, etc. So it's a very sort of varied competitive landscape especially when you take out the big tech companies. But I think there's a couple things to keep in mind when we compare Spotify to these other players. The first one being that, as I mentioned in the beginning, Spotify is really the only global one that's purely focused on not just music but also audio. So there's no really a pure play competitor that's doing something like Spotify out there. For the tech companies, in my opinion, music is pretty much a distraction for them, and they don't really have or seem to have many intentions to make much money from that part of the business. It just serves as an additional service for a sort of a greater bundle. In the case of Apple Music, I know we were talking about this yesterday, Jeremy. I thought you had a very good point in talking about cloud and storage, where they're basically bundling music and arcade and news with a more sort of relevant offering when it comes to iPhone users. So in the case of Apple, I think that's very relevant. In the case of YouTube, people are really just focusing on the video. And if you look at the statistics that Spotify has talked about in terms of engagement, they say it's usually anywhere from 2 as much as 3 times higher than the competitors. So the evidence points to the Spotify product being, much superior to what the competitors are offering, and I think those numbers are pretty compelling, and as well as the fact that they're a lot bigger as well, and they've started to increase prices without much or without any impact to their business. So.
Yeah, and I'll just echo that as one of the reasons I think you don't see the numbers broken out, for example, for Apple Music, because I don't really know if you can break them out in the same way. I mean, so Apple, what you get when you upgrade this for storage, when you buy storage. So let's say you get that famous warning that says you're almost out of storage, and people might look at that and say, well, if I don't buy storage, I'm going to lose these important videos or pictures or whatever. Maybe you don't have time to go through them, and so there's this constant reminder that you're almost out of storage, and over time, people are buying more and more storage for their phone. And with that iCloud service, you get bundled in music and other things. So what we don't really know is if it was what we don't have is a true standalone product to compare, for example, Apple Music with Spotify, or the same with YouTube. When you watch YouTube, anybody that watches YouTube and doesn't have the premium service is familiar with the screen that pops up every single time you open the browser and it says subscribe for 1 month, free trial, whatever, for the premium service. And with that premium service for YouTube video, you get access to music. You get YouTube music as well. So it is a different animal. For these other companies, it's kind of it's an auxiliary product. It's just a feature, and there's streaming catalogs. And I encourage anybody that doesn't use Spotify to just download Apple Music and play with it and compare it to the selection and the interactiveness of Spotify, the recommendation list. When you're there, when you see when you see on Spotify some of the music lists, for example, the lists you see are going to be different for each person. So the recommendation engine is getting more and more superior as time goes on, kind of like Google search gets better and better every time somebody uses it. And that recommendation engine is becoming more and more important as the quantity of music increases. And so as more do-it-yourself artists, DIY artists emerge, because costs come down to publish. And the same with podcasting, as the tools to produce an excellent podcast come down in cost, the more content's added and the more important that discovery feature is. And not only the discovery feature, but the ability for the artist to be able to find and identify their fan base and figure out how they want to monetize them. And that is a fundamentally different value proposition overall than just a music catalog where you can type in your favorite artist and have it play, like, for example, with other streaming services. So the competitive landscape is when you really play with the different products. Maybe you're somebody that just says, I only want to listen to the same U2 song every single day for the rest of my life. Well, then maybe you wouldn't see a big difference. But if you interact with artists, if you interact with music, if you're interested in music, and you're open to listening to new things and you're interested in the discovery feature, Spotify becomes a tool that is hard to live without.
Is there any competitor Spotify has to fear in your eyes?
I think, maybe there's two that come to mind, because obviously in any business you always have to be cognizant about the competition and really understand what they're doing and what the landscape is, right? So when it comes to the big tech companies, it's not something I worry about a lot, especially when I look at Amazon and Apple. But YouTube, I think, is definitely one to watch closely, because in some ways it's the biggest music app in the world. There's over 2 billion monthly active users globally, and I think the last stat we heard was something like 25% of them engage in music listening, or could be even higher. So you're definitely looking at a platform that's very much associated with music. What makes me comfortable as it is right now is the fact that I don't think they have prioritized their strategy in any way to become an audio platform. Their still number one priority is video, and it makes a lot of sense for them as well, because it's much higher monetization when you think about in terms of like advertising and things like that. So if they do end up shifting their strategy to become more focused on capturing the audio share, that's something I would watch very, very closely. So, for example, if you open the YouTube app in your phone and you're not a paying subscriber, as soon as you close it, if you're listening to something, it's gonna stop, right? And I think that's a way for them to try to make you pay for it, right? But if they really wanted to go after this market, they would just give that out for free and sort of try to change that consumer habit and even end up competing more directly with Spotify. So if those are kind of some of the things that I watch for YouTube specifically. But again, we haven't really seen much evidence that they're shifting their strategy in any major form. The other one I like to keep an eye on, especially given how disruptive they've been in the social media space these past couple of years, is TikTok. A lot of people obviously associate TikTok with music. I don't think it's so. I don't think of TikTok as purely a music consumption, uh, application, but it is a very important music discovery tool, and obviously, music is a big part of their platform in general. They did launch a streaming service this year, I think earlier this year or last year, but it basically launched in 3 markets, and we haven't seen any more recent updates. It's supposed to be a little bit more social and focused on on the social aspects of music, something that Spotify has lacked historically. But again, that's just something to watch closely for me, and I haven't really seen that many updates to it or any incremental evidence that they've started gaining a lot of share or gaining traction in important markets, etc. So
yeah, and I'd echo that. I mean, I would agree with all that. I would agree with everything you said. I would also point out that one of the things I look at or think about, what if there's something that kind of kept me up at night, it would be just this general leakage of audio and the internet, and not necessarily all going just to Spotify or any of these big tech people. I think there's some things that, as audio becomes more and more a part of the internet in general, of things you watch, as audio gets integrated more into your daily life and things that you see on the internet. I mean, Daniel Ek talked about this concept in a recent interview at Patrick O'Shaughnessy's 5-year anniversary a few days ago. But I think he's right that, and something I've thought about too, is that really maybe the bigger threat is that they just can't grow like they think they can. And so, although it may be a superior product and service, leaps and bounds in quality ahead of some of the others, there could just be some natural leakage just in audio and the internet in general. And there's so much attention. There's only so much time in a day, and it's really competition for your attention, and then the ability to monetize that. So as audio becomes more prevalent on the internet, including the spoken word versus, video, that is a form of competition, which people may not be thinking about, but it's on my mind as well. But I guess speaking just to the big tech companies, I mean, when I play with the app, of course I'm biased, but the way I use Spotify for research, in podcasts, and the way, we use it at home for baby music and discovery and stories, and listening to interviews with actors of movies that are coming out. I mean, if you think about the way we use it as a family, not just to stream like some curated music list. I just don't see a lot of competition there. I think it's just there's a big gap between what I see as far as quality. It's like comparing an entry level car with a supercar. So, but maybe the threat comes from just the sheer competition of just more and more things, more and more music and audio going online and permeating throughout everything we do. Maybe it's Peloton, and it's a combination of Peloton and TikTok and YouTube and whoever else that's out there, small services in different countries. There's decentralized stuff that's popping up. I mean, it really doesn't have the same. It doesn't have the same ease of use, but I think you're going to, as time goes on, there's going to be more and more ways. The ways we consume audio online are the potential. The different ways that you can consume audio online is going to grow exponentially.
You mentioned the word bias, and maybe it's time for disclosure. We are all, meanwhile, all three invested in Spotify, so we are all a bit biased. But coming back to the questions, what are 3 words that come to your mind when I would say the phrase or the idea of the culture of Spotify? How would you describe it with 3 words? Hey, Tillman here. I'm sure you're curious about the answer to this question, but this answer is exclusive to the members of my community, Good Investing Plus. Good Investing Plus is a place where we help each other to get better as investors day by day. If you are an ambitious, long-term oriented investor that likes to share, please apply for Good Investing Plus. Just go to good-investing.net/plus. You can also find this link in the show notes. I'm waiting for your application. And without further ado, let's go back to the conversation. What is the management and are Daniel Ek adding to the company?
Daniel Ek seems to be somebody that is very inspirational, somebody that keeps everybody on track and who keeps everybody focused and has a vision. And that vision is to have all audio available on Spotify. So keeping people innovating and focused on that single purpose, because it's, and again, these are just listening to interviews with different people in the company. If you can maintain that goal, if you could, in a perfect world, I mean, of course, you're not going to have every single piece of audio on Spotify, but having that as the goal allows you to set, allows the creation it allows for a lot of creative freedom to figure out what does it take and where are the incentives to get big pieces of audio that are not on Spotify to Spotify. An example of that was was SOAP, or the Spotify Open Access platform. So, and we talked about that on the last podcast, but that's an example of a team sitting around thinking, okay, we have to find a way to get iHeart content, for example, a big podcast competitor, onto Spotify. And how do we do that in a way where there's a win for everybody? And that's a very different approach, I think, than some of the competitors who are not as focused on this or do not necessarily they have more of a winner take most mindset versus what do we have to do to get everybody on the platform? And then how much value does that add to our subscribers and to the creators by having everybody on the platform? We'll figure that out later, how to monitor the best ways to monetize that. But this vision and this drive to stay focused on the goal, even when the goal, the goal is it seems sort of simple, but it's actually a very, very difficult goal. And I think he's done a great job of keeping people focused on that. So that would be my takeaway, Daniel Ek.
Yeah, in my mind, I mean, I think he's an incredible CEO, and more recently has started to be noticed by more and more people as his track record grows, et cetera. And I think he will keep on becoming more and more public over the years. I mean, the visionary part is obvious, right? But again, I don't think it can be understated what he's been able to achieve so far, and what his long-term goal is. I mean, arguably the company single-handedly bailed out the music industry. Like that's one way that you could think about it, by having been able to combat not only the labels and convince them to take on this completely new, unproven business model, but at the same time you were competing against a product that was completely free. So I mean, they were battling all over the place. It was such an incredibly challenging endeavor that they took on, and I think it's been amazing what they've been able to achieve. I heard a very apt description of him as a CEO. I think it was last week. There was a podcast on the music business. The Music Business Worldwide podcast interviewed Troy Carter. He's a music executive. He was the manager of Lady Gaga for a number of years. He also worked at Spotify for a little bit. And when he was asked about Daniel Ek, he said he's always 10 years ahead of everyone in terms of like the industry and where he's thinking. And I thought that was such a simple but powerful way to think about it. And most people nowadays are, when we look at, most of us are involved in the stock market, and we're very used to thinking about the next quarter, maybe the next year or something. But this is a guy that's truly thinking about where things are going to be in 10 years, and spends most of his days thinking about that. And that's in many ways similar to, the kind of the Jeff Bezos way of thinking, right? And I think that's a super important attribute to have when you're managing a company of this nature. So in terms of his vision, I think that's a good way to explain it. He's also seems to me to be an extremely patient individual, and in his own way, he has a very firm vision, but at the same time, I think he strikes a balance of, having the right flexibility in terms of how to get there, right? I don't think he knew exactly how it was going to happen. So you can't really trace that path from day one and know exactly how you're going to get there. So you need to have also that flexibility in your mind and sort of change course when you have to. And I think we've seen this already with the change in strategy as they implemented podcasting into their business model in the last couple of years. And we'll see more and more examples of this going forward.
Yeah. And I would just echo that he's not afraid to take really big risk before anyone. They have been the trendsetter. I mean, their entrance into podcasting was really a first. They went in a really big way. And I think what he saw as far as the future of audio and that pivot away from just being a music streaming company was, I think we'll look back someday and see that was just a brilliant move, kind of similar to what Reed Hastings at Netflix saw when they moved away from the CD and went to streaming and saw a future where all video would be streamed someday. And so that vision of transitioning away just from music to the bigger audio space, it sounds maybe trivial, but in fact, nobody had done it. And he was a first. And I think you'll continue to see the company make big first mover decisions ahead of everybody else. And then there'll be catch up by the competition that comes in. And it seems to me that in the industry in the last 10 years or 15 years, or since Spotify's been around, it's always been about Spotify making a big decision, strategic decision, and then everybody else trying to catch up. And Daniel Ek has said multiple times that Spotify is not for sale, that he wanted to build a company with Lorenzo, I think that is his name, the co-founder, Lawrence, that they wouldn't need to sell. And I really admire that mindset. The company was not built to be sold. The company was built as a living organism to grow and to be as absolutely as big and important as it could possibly be. And he's slowly building his own life's work and painting it in the public eye. He doesn't take a salary. He's fully aligned with the common shareholder as the largest shareholder. And, when you invest in Spotify, you are getting Daniel Ek essentially for free. I mean, there's no, you're not paying him a fee. There's no special equity class that he benefits from that the minority shareholders don't. You probably won't look up one day and have any crazy capital allocation decisions made that are short-term oriented, for example. just to pump the quarter or whatever. So like you would potentially at other companies. And you also don't see him taking shortcuts like you do at a lot of other big tech. There's several big tech companies that I've noticed taking really big shortcuts that have built products and services really more for the advertiser and not for the consumer. And so the short-term mindset leads to problems down the way. So this idea more that, giving more than you're taking and building something to stand the test of time for as long as possible is, that's the kind of company I want to be invested in, because I can be fully aligned with some of the best people and one of the best CEOs and entrepreneurs in the world.
Daniel Ek is a friend with Mark Zuckerberg. That was disclosed in one of the podcasts of Patrick. And, from Facebook, they have the strategy, if they see something interesting coming up somewhere in the world and new trends, they buy it or build something and use the leverage they have with their users on the platform to fight against competition. Do you see something like this adaptability or this acting also at Spotify, that then they see something that's taking off, they also copy it or try to buy it?
Yeah, absolutely. I mean, the acquisitions they've made just in the last 12 months have been not only incredibly strategic and valuable, I think, but they've been done on a value basis, and for these are relatively small companies. I mean, just the acquisition of the Green Room. I mean, they I guess technically they could have gone out and tried to buy Clubhouse for many billions of dollars, but instead they found the Green Room, which is incredible, and did a deal with them that was small enough to where it doesn't have to be disclosed. If that tells you something, probably I heard something around 50 million plus an earnout, but who knows? The acquisition of Pods. I mean, probably we're going to look back at the acquisition of Pods and think that was probably one of the most important acquisitions that they've made. And that was also done at a point where for an amount of money small enough that it didn't have to be disclosed. So we're talking about capital allocation and discipline. Looking at everything they've bought, Anchor, all the big podcast stuff, including the investments in the Joe Rogan Experience and the exclusive content is just it seems to be a real strong focus on payback and maximizing what they buy and not spending as much as maybe some of the bigger companies like a Facebook, for example, in order to deliver something really important as far as a strategic fit for the company's next step up.
Yeah, I've been pretty impressed with their capital allocation strategies and track record. The more I've been following the company, I think it's very clear for them when it makes sense to buy something versus to build it. And a lot of it comes down to how time sensitive it is to make a move on something. So could they have built Green Room on their own? I mean, yeah, probably they could have done that maybe in 6 to 12 months, but instead they decided to buy Locker Room. And in less than 3 months, they had rebranded the entire product and relaunched it. So, live audio had become viral in many ways at a very quick pace. I mean, Clubhouse, everybody started hearing about Clubhouse in February, so it wasn't really that long ago. And Spotify moved promptly, in a matter of a month or two after everyone was talking about Clubhouse. So I think that was the right strategy. And as Jeremy said, we've seen various examples of that in different parts of the value chain, not only on the podcasting side and live audio, but also on the music side. And I think we'll keep on seeing more and more of that.
Yeah, and in the past they've talked about free cash flow. They've talked about the number of days of free cash flow used to pay for something. I mean, I think they're they realize too that it seems to be that they realize that they want to buy things that enhance the broader vision and enhance their bigger strategy. And so by default, that means they're not necessarily buying an entrance into, they're not using one company to completely enter something new, but more buying companies that just enhance the existing value proposition of what they already have. So it would have been a mistake, for example, to buy Clubhouse because they didn't necessarily need to buy that user base. They just needed the basic technology of live streaming to plug into their existing user base and their existing podcast ecosystem. So from that perspective, it just the technology itself was the driver more so than the brand, because Locker Room was rebranded. Locker Room originally was Betty Labs and something, but it was rebranded to Green Room. So it was really the technology, which meant that they could pay a much lower price because it was a much less developed as a business and more developed as on the tech side. And I think you see that with pods too. Which again, I've talked about it before, but I think we'll look back as one of the most brilliant acquisitions that they've made. Pods it seemed like a very developed tech that was much further ahead of anyone else, of the competition, and the quest to kind of figure out how to monetize the spoken word and socialize the spoken word. But the tech was built out, but the business itself really wasn't. So it was a perfect match. And I would assume that the sellers, because they're staying on and they're helping to be a part of a much bigger repositioning Spotify and being a part of that future, that they have an earnout that allows them to feel like they're made whole and not regret selling the company too early because of the importance of that tech and the distance that tech can go within Spotify versus as a standalone business. It's a different capital allocation strategy than buying massive companies for tens of billions.
Yeah, so it's definitely been shifting to Spotify's favor if we think 5 years ago versus today. And I think the trend still holds if we look out on the next 5 years. So back in 2016, the labels had a lot of most of the power when it came to negotiating these very complex deals. The payouts were much higher, so the Spotify's gross margins were much lower than they are today. Before the IPO, I think it was in early 2018, they were able to negotiate higher payouts right before going public. The next step in the evolution of this relationship, which as it stands today, I think it's very symbiotic. So they basically need each other, and they're not going to do anything to hurt each other. But that doesn't mean that the negotiations are easy, though. They're still very, very tough and complex. But I think what Spotify will be able to do over the next few years is to start bringing some of the label expenses over to their income statement, basically. And we've already seen some of this with the two-sided marketplace strategy, where the labels will be spending some marketing dollars on Spotify, basically at very high gross margins. And we can see this develop in different ways, and eventually even start monetizing some of the data that Spotify is providing the labels. So not necessarily directly changing the percentage of payouts that they're giving out to these right holders, but find more creative ways that can sort of grow the pie for everyone, and everyone's gonna benefit from it. The other option that comes to mind there as well is price increases, where Spotify can find ways to get a little better sort of payout structure for every incremental dollar that they're able to increase prices on.
Yeah, and I think there's been this mindset in the market that it's this tug of war and this fight over a very finite dollar amount of, a very finite margin that they're fighting over. And I don't think that's true. I think that there's what's going to happen in 5 years is Spotify's margins will definitely go up, and the relationship with the labels will absolutely favor Spotify more and more as time goes on. But the labels have their own really unique opportunities to grow, and they also have their own margin expansion opportunities as well. So I like to think of it as the industry is just so small. The addressable market, and it's the way we've thought about music in the past, is really limited the addressable market. And as we go forward, the addressable market will just expand. I mean, I think the opportunity of the addressable market is really the bigger story, and there's room for everybody to make a lot more money. The way that labels conduct themselves and grow an emerging artist or even an established artist are changing really rapidly, and they're depending more and more on digital marketplaces and digital tools. The kind of person that would have been successful at a record label or would have been hired at a record label 20 years ago is probably very different than the person that they would hire today. I mean, the job to be done today, to use Daniel Ek's terminology, is at a record label is probably maximizing the brand value of an artist on different digital formats and finding new businesses and new ways to engage with the fan base. First of all, identifying the super fan base all over the world, and then finding ways to engage with them beyond just selling them advertising or selling concert tickets. And you don't do that through, that's not necessarily something, the skill set required to do that is very different. And so there's a lot of changes happening that do favor the larger platforms or a digital mindset in general. But that doesn't mean that the labels lose and Spotify wins. I think they all kind of win. To Sleepwell's point, the balance of power though is feels like it's shifting much more to the benefit of the digital platform, which is where the new sources of revenue are going to come from, and where new business models are being built on top of the data that platforms like Spotify are able to generate.
Do you have any rough estimate about the TAM growth? What is the TAM now at the total addressable market? And
well, the TAM now, I mean, recorded music is something like 32 billion a year, and there's some debate on that number. From what I've read, a lot of times numbers are counted twice and there's overlap, but the actual number is somewhere around 31 billion and recorded music, and podcast advertising revenue is less than $1 billion, which is kind of crazy to think about. So the old way of that music was brought, it was through the traditional way that music was brought to consumers has completely changed. It was controlled by a handful of people, and the opportunity just for a musician or for a creator, whether it's a podcast host or an audio book owner, or even maybe a medium that we don't necessarily have as mainstream today, to make money by maximizing the brand value of the artist is what is not in the addressable market today. So the addressable market today is essentially just streaming revenue, and maybe on the other side, concerts, and maybe a little bit of merchandise or something. And it's really, when you think about what is the value of a super fan? I don't know if you've ever really fallen in love with a band, or had a song really move you and get you through hard times, or have a memory, a really important life moment, anchored on a song or a group. You don't have to go further than high school to see certain kids, what music does. Certain groups, it determines the way you dress, the way you think, the friends you hang out with. And as you get older, it also has more value just beyond a background music in a grocery store or something. So you think about what does a country concert mean for the 2 hours you're at a country concert? It's Americana, it's tailgating, it's barbecue, it's all those things. What does a U2 concert feel like for that 2 hours? It's the rush of the experience, but it's also what does it stand for? And what else could Bono and U2 sell to their super fans beyond just a concert every 2 or 3 years? And I think we're just now starting to explore what that means, whether it's individual experiences with the band or just the feeling of what it means to be a part of that tribe. Whatever that represents. You think about the advertisement that Bruce Springsteen did or the Super Bowl for Jeep, and the Bruce Springsteen kind of person, the way he dresses, the car, the Jeep he drives. It's a lifestyle. It's a way of thinking. It's the genre. It's the topics that he sings about, for example. To think that the only value in Bruce Springsteen's value is just limited to how many concerts he can sing or the number of streams he can get on platforms is kind of ridiculous. I mean, it feels like we're just scratching the surface and what's possible between what's possible between a creator and the super fan. So I don't know what the answer is, but it's definitely bigger than 31 billion.
It reminds me a bit of a scene I saw from the documentary about Rammstein and their global success. And they went to Mexico for a concert. They were the first time there, and they then discovered outside of the concert, there's a whole ecosystem where they sell Rammstein products with every different piece. You have bottle openers, keys, whatever with Rammstein logo, and they didn't even know about it. So transform this in a digital world.
And Daniel, like has talked about before, Spotify is essentially is morphing into just a tool set for a creator to identify a way that they want to make money. So some creators, maybe it's give everything away for free or just sell concert tickets. For other creators, it's selling something really exclusive. So it's just, the first step is to identify your fan base, and that fan base is constantly evolving over time. It's not a stagnant thing. It's constantly in motion and moving and evolving, and identifying who those people are and their tolerance for what they're actually worth to the artist, and building that interaction and that feedback between the two. Whether it's a podcast host, whether it's unlocking data and information that's discussed in a podcast, to unlocking the brand value of a startup, young rapper coming out of, the ghetto, some ghetto and a poor country in Latin America, for example, and connecting with an audience maybe in Norway. I don't know. So there's just a lot that can be done. I mean, it feels a lot like the early days of the internet. It's one of the industries that has not really evolved financially with the internet, kind of like other industries have. So when you talk about the TAM, I just think it's unfortunately something that you have to corral into thinking about maybe Spotify's opportunity to sell premium subscriptions and advertising and podcasts and stuff like that. And that opportunity is probably tens of billions more than it is today, a longer term. But as far as the entire industry is concerned, I mean, just think about the value of putting more music, finding ways to put more music and on the internet alone, and spoken word on the internet alone is just got to be, it's just got to be enormous. And to take a stab at it would have been like taking a stab at what is streaming video worth. 20 years ago, 15 years ago, people thought that Netflix didn't have any value and would be forced to sell to a bigger competitor or to a big movie studio, because the consensus was that the video streaming addressable market was maybe 1 billion. And fast forward today, and we still don't know what the addressable market is for online streaming, for video streaming. I mean, it's just going to continue to grow and grow, but we know it's definitely a lot bigger than 1 billion. So it's an incredible runway to invest in.
I think about it in different ways, and any way you look at it points to just how under monetized the market is and how large the opportunity is. I think we can go anywhere from 4, maybe even 5 times as big as we are today in 10 years time, right? If you think about, streaming penetration right now, you have around 440 million paying subscribers globally. There's roughly, call it 4 billion smartphones, which is consistently growing at a rate of maybe 6 to 7%. So naturally, you get a tailwind from that as well. But just by getting higher penetration from streaming on a global basis, which I think is a natural thing to happen in the next couple of years, as we've proven how much of a superior value this product is for every consumer out there. And then on the other hand, you have the monetization side, which can also improve. So when you combine those and put those two together, it's not hard to see how this market can quadruple in the next 10 years. Sorry.
Well, and to your point, Sleepwell, it's, by our calculations, there's something like 4.3 to 4.4 billion people between the ages of 15 and 64 who are potential, that's kind of a potential demographic to be a premium subscriber in the world, ex China. So just excluding China, because China has its own, they have Tencent Music and they have their own regulations and rules. And so just forgetting China, the rest of world, ex China, is about let's call it a similar number to what you were just talking about with smartphones. So let's call it maybe even 4.3, 4.2 billion people. And Spotify, in a lot of markets may have 20% of that, but it's still very, very underpenetrated. So globally, I think, at 165 million paying premium subscribers, maybe they have, by our calculation, less than 4%. They penetrate something like 3.5 to 3.8% of the market, and on including the freemium subscribers, you're still at like 8.5% of 15 to 64-year-olds ex China, which is pretty incredible. And just looking at the US numbers, and again, it's hard to think about Spotify being by far the market leader, and it's still yet such a small company in terms of percentage of market share compared to radio. But in country, and in places like Europe, where Spotify, Spotify is a Swedish company, and I'd say Europe is probably more saturated or more evolved in terms of streaming than other places. But Spotify still only has like a little over 20% penetration with 66 million premium subscribers, which is about the population of France. So there's just no matter how you look at it, whether it's Africa, of 1 billion plus people between 15 and 64, whether it's the rest of Asia, whether it's Latin America, with 400 and something million people between the ages of 15 and 64, there's just an enormous opportunity, whether it's freemium or premium, and we're just scratching the surface.
In your eyes, what are the top 5 growth drivers for Spotify? Like the 5 forces that can bring the growth?
Sleepwell and I had a great talk yesterday, and he had a really interesting way of framing the flywheel. So you might want to, maybe that's something to talk about.
Yeah, I think it makes sense, especially given there's been a subtle shift in their management's narrative and way of explaining the company, where we've seen a more recent focus on the creator side. It used to be a lot more focused on the user experience, but I think now there's more of a balance between being able to help out creators and work towards their goal of eventually achieving 1 million creators being able to live off their craft, and at the same time serving 1 billion users. And I think these two sort of supply and demand components really feed off each other a lot, because if you give creators the best tools to monetize and connect with all of their fans, and offer them the best platform to to exemplify and show off their work, it's naturally going to bring a lot more users to the platform. And at the same time, you get the classic flywheel effect, that the more users you bring, the more likely creators are going to be attracted to your platform. So I think it makes a lot of sense for Spotify to pursue this strategy of attacking both sides of this supply and demand curve. And that's going to be a very big driver of their growth going forward. So if we translate that to sort of more KPI metrics, obviously we're looking at MAUs, and both MAUs and premium subscribers. But then you also have to pay attention to what management is saying in terms of how many creators they have in the platform. I think the most recent number we heard was somewhere in the 6 million figure. If you count, this obviously includes artists and podcasters. We've heard management say they can probably double this number in the next couple of years, and eventually reach a figure as high as 50 million creators, which I think is incredible, right? So these two I think are the most important metrics to keep a close eye on as we go forward, and the strategy develops. The other one that comes to mind for me that's super important is engagement, right? And there's different ways to think about this and sort of understand how much of the listening share is coming from podcasts, and if that's increasing overall music consumption as well, and increasing the overall time spent on the platform, and also comparing how much time is being spent on Spotify versus the competition. So those are some of the big ones that I like to focus on.
Yeah, and I think just to chime in on that, it's the flywheel of the engagement is key. So the more time, whatever Spotify can do to increase the engagement is probably the most important investment they can make. So the engagement drives so the model is most people they come in as a free user, freemium, and then they convert to premium over time. So the more somebody's engaged, more subscribers engage with the service, the higher likelihood that they will convert to a premium subscriber. And so the business model is around increasing that engagement. So it's not good enough, for example, I think, and Sleepwell, tell me if I'm wrong on this, but I think that the average engagement is something like 25 or 30 hours a month. And so their goal is to maybe, and probably a lot higher now.
Last we heard, yes, but I think that might be higher now with podcasts. This figure was like from 3 years ago or something.
Oh, okay. So let's say it's, I don't know, 30% higher than that. Yeah. And so the more they can do to increase engagement. So let's say, by focusing on the artist and building value for the artist, by default, it builds value for the subscriber, and it encourages the subscriber to engage more, which increases the chance that they'll flip to the premium service, which also over time increases the chance that they'll pay more for that premium subscription. So if you think about Netflix, where they were, there was a point in the past where, the selection wasn't that great, going back 10 years or 8 years. But today the selection is so great, and it's become such an integral part of people's video streaming life that it's easier. The engagement is so high, it's easier for Netflix to raise prices. And I think you'll see that with Spotify as the engagement increases, because you have access to some events or some more engagement with artists. Let's say you get an invitation to do a behind the scenes or pre-album engagement with an artist before the concert, or you get Patrick O'Shaughnessy says, hey, you can, to my top my top fans get to ask, one-on-one questions with the person I'm going to interview right after the show. Things like that are going to cause you to engage more. And I think one of the they're just working on so many different ways of focusing on that engagement and increasing that engagement. One of the things they talk about is, becoming the audio browser, and the audio browser, for example, in podcasts could be, it could be really valuable to be able to do more and more research and search things out through podcasts. And so I can see a future where you just can't live without you can, but a future where it becomes normal for most people to have a subscription to Spotify, a paid subscription to Spotify. Just like you think of Netflix today, it's relatively normal for most people in the developed world, at least, to have a subscription to Netflix. And they're going about that through doing whatever they can to increase engagement and providing much more value than they're asking you to pay.
Maybe let's walk a bit through the puzzle pieces they are building to increase engagement. And one big puzzle piece is the widening of the market with the offer of the service to emerging markets. They released at the last Capital Markets Day. How they are going about emerging markets, Spotify?
They launched in 85 markets this year, right?
Yeah, I mean, just first off, when it comes to these markets versus launching in markets where they actually had a very big head start, like Latin America is known to have been a massive success because they were pretty early on the process, and the brand was already very well known in the region. So they're very much the undisputed leader in the entire region. But these newer markets mostly were in countries like in Southeast Asia, Africa, the Middle East, a handful of other countries in other regions, but basically most of them were centered in these regions. I think it's not a surprise because we know they're going after basically the entire world, excluding China. And, we know that from the most recent quarter, results weren't as, they weren't as impressive as maybe some people would have expected them to be. But I think there's a couple things to keep in mind when it comes to these newer, more sort of developing countries. The first one is that a lot of them are very much dominated by piracy, right? So you're working towards competing with a completely free product, right? And sort of educating the consumers about this superior product that you can also have for free, and eventually it would make sense to pay. Obviously, you have to offer it at a much lower price point compared to any other market that has higher incomes. And at the same time, in many of these markets, you're competing with local players that may have been around for maybe 3 or 5 years, right? So those already had a head start, and the marketing spend in these launches is very important, and something that they actually cut down in the last couple of months because of COVID restrictions that came back in certain places. So I think it's very important to follow these newer markets and see what the traction is like. I think it will take time. I don't expect them to get millions and millions of new MAUs and subscribers overnight, but it's definitely the right strategy. And I also think they had to move fast because, again, you already had some competition with local presence. YouTube is another big player in many of these countries that's been around for a long time. So time was definitely of the essence, and they had to move fast in that sense.
Yeah, the monetization of, I just keep coming back to something. It's just a really basic fact is that as of last quarter, the company was earning something like 50 cents, US cents per subscriber in gross profit. So it's the opportunity is there. That gross profit per total subscriber has continued to grow, is CAGR'd in the mid-20s for the last 5 years. But there will be a point where that grows. I think it has the potential to grow just exponentially. And a lot of it has to do with with them figuring out how to most effectively open up these markets that they're just now getting into. So if you think about some of the less obvious opportunities, in developing countries. So let's say they opened in Tunisia. One of the markets they talked about was Tunisia that they opened in. What is the opportunity in Tunisia? Do we think that everybody is going to start paying $10, $15 a month for a subscription in Tunisia? Probably not. But if you think about the opportunity for an artist that didn't have an opportunity before, they didn't have an audience before, there is a natural pull through where a local artist now feels like, that they can be heard, that they can upload their music through like a digital label, like Believe, for example, and build a fan base. And that has two things. First of all, that helps create engagement and with the existing Spotify user base that might be interested in that music. And secondly, it drives new users in that country and for that type of that music as well. So if you discover a new musician in Tunisia, for example, and that guy says, hey, or that girl says, hey, I'm on Spotify, there's a higher probability that word will spread, and that the audience or the fans of that artist will at least listen to the freemium model in Spotify to listen to that artist. And as the tools get built out, which are really there to either compensate that artist in different ways, or book a concert, or sell merchandise, or support them in a certain way, as those tools become more and more prevalent, with the combination of, I think, maybe a blockchain solution and payments that maybe we'll talk about later through the DM Association, and you start to open up a way or different paths to monetize those markets in a way that I think the market's not necessarily thinking about, that will be a little bit different from just the obvious, just increase, expecting that everybody's going to have a premium subscription.
Now it's time for a break. As our episode on Spotify was really long, we decided to split it into 2 episodes. You will find more on Spotify in an upcoming podcast on this channel. So please subscribe. Thank you. As in every video, also here is the disclaimer. You can find the link to the disclaimer below in the show notes. The disclaimer says, always do your own work. What we're doing here is no recommendation and no advice. So please always do your own work. Thank you very much.